In the last video for this chapter, I would like to talk to you on how to report cash. And you're probably used to cash, meaning just regular coins, and currency, so meaning paper money, dollar bills. But then cash also constitute checks, money orders, money on hand or on deposit in the bank or other similar depository. We also have a notion of cash equivalents. What are those? Cash equivalents are short-term, highly liquid investments that are both readily convertible to known amounts of cash. So for example, I can check online how much this certificate or deposit, for example, is worth right now, and so near their maturity that their market value is relatively insensitive to changes in the interest rates. So it's not like the certificate of deposit will go down to half of the value. And usually when we say short term, we're talking about 90 days. And we can also have restricted cash that are not available for general use, but rather is restricted for a special purpose. It could be a court restriction, for example. If there's a lawsuit litigation going on and the court could put specific restriction on the amount of cash until it all settled. Okay, so for example, Data Airlines, under current assets, you will have cash and cash equivalents combined together, and restricted cash has to be separated from this. Okay, so let's take a look at a multiple choice question. Which of the following statements correctly describes the reporting of cash? Cash cannot be combined with cash equivalents. Well, in the prior slide, we saw that they could. Restricted cash funds may be combined with cash. Prior slide again, I told you no, and it was a separate line. Cash is listed first in the current asset sections. That's true. And then the last one, restricted cash cannot be reported as a current asset. You just saw that it is reported as a current asset. So C is the right answer. What we walk through, do it, that is in your chapter at the end, to see which of the following statements are true or false. And if it's false, indicate how would you correct this statement. The first one, cash and cash equivalents are comprised of coins, currency, money orders, and NSF checks. So the one that was not in my slide is actually in the NSF checks. It should be reported as receivables. If you remember, when an NSF check was returned by the bank, we had to do a journal entry and take it out of cash and put it back as a receivable. Restricted cash is classified as either a current asset or a non-current asset depending on the circumstances. So this one is true. So again, circumstances, court order or whatnot, if we think that restriction and we will be using it beyond 1 year, it should be classified as a non-current asset. A company may have a negative balance in its bank account. In this case, it should offset this negative balance against cash and cash equivalents on the balance sheet. This is actually not allowed. If you have a negative balance in the bank account, it should be reported as a current liability. Okay, so it will be in accounts payable as opposed to part of your cash, or you cannot net it against your other cash. Because cash and cash equivalents often include short-term investments, accounts receivable should be reported as the first item on the balance sheet. No, it's a false one. Cash equivalents are readily available and convertible into known amount of cash and near maturity. Remember, I told you 90 days. So they're considered to be more liquid than accounts receivable, and therefore they will have to be reported before accounts receivable on the balance sheet. So hopefully that will help you with some of the definitions of cash, and especially cash equivalents that you might encounter in your exercises.